All right. Hello, everyone. How are you doing? Let me know what is going on. How are you feeling? We're going to give it a second and let people come in, and then we will go ahead and get started. Let's see. Let me take a look at the chat here. Let's see. We're going to get started very soon, guys. Just going to let people come on in, and then we can go ahead and get started. Cool. Say what's up in the chat. Let me know if you can hear me. How is everybody doing? Hope you're all having a good day. Let me go ahead, pull up the chat here on my phone so I can see what everybody's saying. What's up? Hello, doing good. What's up, Quan? Doing good. Asvi, doing really good. Tayef, I'm doing pretty good, guys. Honestly, I had a losing day today, but overall, very solid day to begin with. Good to see you guys. Again, we're going to get started very soon. I'm just going to wait for more people to join. So this is a strategy building live event. Give me 1 second, and then we will start very soon. Yeah, let me know in the chat. Yeah, crazy market day, Jackson, for sure. It's been pretty crazy. Very up and down. Samuel, hello. What is going on? Mega Monster, hello. Hope you guys are all having a good day. I know I've been having a good day so far. Yeah, it has been pretty crazy. But overall, very solid day. Market was very up and down today. A lot going on, but we're gonna go ahead and get started in just a minute or so here. Clear my throat. Yeah, it was a crazy day in the markets. Very up and down. I think Tesla just reported as well. Wonder which day in the market is easy. Yeah, exactly. There is no days where it's easy. Unless you have a specific strategy in place, which I'm going to talk about in a second. Can you guys hear me okay? Let me know. Give me yes for if I should be louder, if I should be quieter. Let me know. We can get started in just a second. Let's see. What's up, Kit? How are you doing? Put this up. Yeah, so cool thing at the end of this, we're also going to do a Q&A. So if you guys have any questions, I will be there to answer that. So make sure to stay to the end because I also have a surprise. Yes, you can hear me. Yes. Awesome. Cool. Tesla was a beast, made some money both ways. Yeah, Tesla was crazy. Crazy day in the market. For sure. Okay, give me 1 second and then we'll get started here, guys. 1 quick second, and then we will go ahead and get started. Okay. All right, let me pull that chat up, and then we should be all good to go. And awesome. All right, we're going to go ahead and get started, guys. Make sure you have a pen and paper. Get ready. I think it should only be around 15 to 30 minutes, not too long. Don't want to take up too much of your time. Here's a quick overview of what the webinar is going to be about. First, we're going to go over what is a strategy. All of the components that make up a strategy, how to create one, and also key details on how to make a strategy that actually works. A lot of times people just throw strategies out there and they end up losing a bunch of money. So it's very key to make sure that you know what a strategy is, how to build one, and then also how to make a strategy that actually works. So at the end of that, we're going to do a quick Q&A. So in the live chat on YouTube, you guys can ask me questions and then I will answer them. Do that for about 5 minutes. And then I have a surprise at the end for all of you. So make sure you stick around to the end because you don't want to miss this very cool surprise. So with that being said, we can go ahead and get started. Also in the chat, let me know if you ever can't hear me or something's going on or it's lagging. Let me know. and I will fix it as fast as I can. Cool. So let's go ahead and start the Secret Six. Okay, this is a method that I came up with figuring out how to create a strategy. Okay, so there's 6 components that a strategy is made of. There's what, when, how, your entry, your stop loss, and your target. And I'm going to go into all of these because it's very crucial that you have a very clearly defined strategy for your trading. Okay, so what? Very, very simple. What are you trading, right? You could trade stocks, you can trade options, futures, crypto, Forex. There's a ton of different things. So the first thing you need to write down and figure out is what actually are you trading? Shares, options, futures, crypto, Forex. Very, very simple first step. Shouldn't be any issues at all. Let's move on. More specifically on what price range stocks are you trading? So this isn't as much for futures or crypto possibly, but more for stocks and options. You really want to narrow down which niche you're going to figure out and trade with on your trading. So do you want to trade stocks that are in between $0 and $1, right? Penny stocks. Do you want to do a little bit higher, $1 to $10? Maybe you're looking for large cap stocks that are $100 plus. So you really need to figure out which type of stocks you are best at trading and which ones work for your strategy. Obviously, in the process of building it, you need to kind of just pick one and figure it out which one works. And then over time, you can refine, and which we will talk about at the end of this webinar, exactly how to do that. But for now, figure out exactly what you're trading and then what the price range stocks are. So you want to be very specific on that. Third, day trading or swing trading. Again, are you going to be day trading or are you going to be swing trading? Are you going to be doing $50 stocks, $1 stocks? So you really need to dive down, figure out exactly what kind of, instrument you're going to be trading. Now we're on to when, right? So let's say you decide you are swing trading. If you're swing trading, how long should your swings take? Should they take less than a week? Should they take 1 to 2 weeks? Should they take 2 to 4 weeks? Should they take more than 4 weeks, right? These are all things that you need to dial down and figure out when you are doing your strategy. For me personally, I like taking my swings in less than a week or 1 to 2 weeks. But at least I know and I have a clear definition of what my strategy is and how long my swing trade should take. Okay, it's very, very important that you're very detailed and crucial with what exactly you're going to be trading. If you're day trading, how long should your trades take, right? Are you going to be scalping? Is it going to be 1 to 2 minute trades? Are your trades going to take 5 to 30 minutes? Are they going to take a few hours? Is it going to take 4 hours? Is it going to take the whole day, right? These are the type of questions you have to figure out with your trading strategy, right? I know for me, when I like to do credit spreads, they can pretty much take up the entire day. So I expect those to last, a few hours up to, 4, 5, 6 hours. When I do my scalping strategy, I know that these should only take 1 to 2 minutes. And if it's been 5 or 10 minutes and I'm still in the trade, something is wrong and I should be getting out, right? So it's very important that you get extremely clear on what you are exactly trading and how long your trade should take, if day trading and for swing trading. Next is how. This is pretty simple, right? How are you going to take your trades? With shares, it's pretty simple. You just take shares. Futures, again, futures contracts. Options, are you going to be trading, which kind of options? Very, very simple though. How this Secret Six part is extremely easy to figure out. So this should be very clear for every one of you. Okay, now we can get into the juice of it. We have entry, stop loss, and target. We're going to start with entries, okay? So this is a key concept, right? Trading strategies revolve around 1 to 2 main concepts, okay? Then they have confluences around it. And I'm going to go in depth and explain exactly what that means, how that works, okay? So, examples of main concepts you can use. You can do supply demand, which is what I like to use. You can do support resistance. You can do an opening range breakout. You can do volume profile nodes. You can do moving average bounces, right? There's a whole different list of tons of different strategies you can use that you use as your main concept, okay? So I really want to put it into your brains, install that there are main concepts and then there are confluences, okay? So confluences. Examples of confluences would be moving averages, candlestick formations, volume, indicators, options flow, right? There's a lot of different confluences that you can use as well. So the way that these work is your main strategy is based around these concepts. So I could say supply and demand. And then I have confluences. So supply and demand combined with volume and options flow. So as an example, let's say I am trading supply and demand and there's a demand zone. Yes, I do want to buy in the demand zone, but if I buy every single demand zone and sell every single supply zone, I may not make any money. Okay, it will be up and down, back and forth, but that is not a very clearly defined strategy. Now, if I add other conditions like volume, for example, so I say, okay, I'm only going to enter when there's increased volume at the demand zone, or option flow, right? I'm only going to enter when there's increased volume at the demand zone, and I'm only going to enter when there's option flow, right? When there's a lot of calls coming into the market, right? So those are two different examples you can use for your main concepts and your confluences. So again, another example. You need to create at least 3 rules for entry using your main and confluent concepts. I say at least 3. You can sometimes do 2. The more, the better. You want to be as specific as possible. So example, let's say I am trading a support resistance as my main concept, and then we have a few other confluences, right? So an example would be, okay, the stock must engulf on the daily time frame, so that's one of the confluences, at a support resistance level, right? Second confluence, number 2, there must be elevated volume compared to the previous 4 days. And number 3, entry is on the break of previous day's high or low. So very, very simple and very clear of, okay, this is what needs to happen for me to enter, right? There must be an engulfing on the daily time frame at a support resistance level. There must be elevated volume. And then when specifically do I enter is at the break of the previous day's high or low, okay? So once you get this down, you get very, very clear with your entries. That's going to help you get one step further to building a profitable trading strategy. Second, stops. Very, very similar to the entries part, right? Stops can be based on price, time, or a different strategy. I would say majority of them are based off price, and not enough people look at time or strategy as a potential exit. So some examples going below, right? When price goes below a level, that's a very clear price-based stop, right? I can enter at, when stock is at 200, put my stop at 190, and then boom, when price goes to 190, I stop out. You can do number 2, when price goes below a moving average, right? So that's very similar to a strategy. When price goes below a certain, moving average or a certain moving average crossover, that's when I get out of the position I'm in, right? So that would be a good example of using your stop based on a strategy. When price hasn't reached X level by X date, this is a very, very key one that not a lot of people look at. When I am swing trading options and I have, there is a limited amount of time on that option, I want to see price moving to my target fast and in a specific amount of time. If that doesn't happen, decay is going to kick in and I could potentially lose money. And so having a stop that is based on a time frame, right? When price hasn't reached this level by this date, that's going to give you a very good indication of better results to help you improve on your strategy. Moving your stop to break even when X, right? So when do I move my stop, right? When I'm at one target, when I'm at 1R, when I hit my first target, is that when I get out? Or is that when I move my stop to break even? Do I move it up after it gets above a certain moving average? Do I move it up? Do I move it up at all? Do I move it down, right? These are all questions that you need to figure out. Lastly, example would be trailing stop. So always good to have in your toolbox is a trailing stop. So these are just a few different examples you can use for your stops when you're coming up with your strategy. Example. If price breaks, so if we go back to the previous example of the entries, right, we had the engulfing on the daily time frame, elevated volume, break of the previous day's high or low. If price breaks the engulfing candle low or high, stop out. So very simple based off price. If price breaks that low or high, we're going to get out and we're not going to look back. Number 2, if price doesn't hit the target in 2 weeks, stop out. So this could be a swing trading strategy. So I may be looking to get my targets hit within 2 weeks, because that's how my strategy is, and that's how long these trades should take. So if price doesn't hit the target in 2 weeks, that's when I'm going to get out. Okay, it doesn't matter what price is, doesn't matter what's happening. I'm going to get out if my target has not been hit in 2 weeks. Number 3, after my trade is in 1R, move the stop to break even. So let's say I'm risking $50 on a stock and the price is at 200. I get in and the price moves up to $250. I'm currently up 1R. So now I'm going to move my stop to break even where the price is at 200. So it is now a risk-free trade. And I no longer have the possibility of losing money on this trade. Right, so very, very clear, specific on when to get out, when to get in with entries and your stops. Targets. This is when you need to get very clear with your targets. So, do I have one target or am I going to scale with multiple targets? If I'm using one target, I need specific rules for when to exit. Again, based on price levels, based on time. If you're selling options, right? If I'm selling credit spreads and price doesn't move, it just chops around, but I'm up 50% on the position, should I get out or should I not, right? These are types of questions you need to figure out when you're building your strategy. You need to become very, very clear on what exactly you're going to be trading. Guys, put in the chat, put in the word yes if you can understand exactly what I'm saying, and if this is providing value to you so far. Let me know. Put something in the chat. Give me a yes, give me a exclamation point, whatever it is, something to let me know that this is helping and that this is going to help you become a better trader. Okay, we can get moving on to our next slide here. Targets. If we're scaling, right? How many targets are we going to have? What percent of your position are you going to get out at each target, right? Should I have 3 targets? Should I have 4 targets? What happens if my second target hits and my third target doesn't? When do I get out? When do I stop out? Right? And then what percent of your position do you get out each target, right? Let's say I have 5 contracts and I get long and price hits my first target. Should I get out 4 of the contracts? Should I get out 3, 2, 1? How many should I get out at my second target? How many at my third target? Right? So these are the type of questions you need to ask yourself. You need to be very, very specific on what exactly your entries and your exits are going to be. It's very, very important that you guys have this clearly defined. Next. So that's the secret 6, right? If I go all the way back here, you can see the secret 6. You have your what, your when, your how, your entry, your stop loss, and your target. So these are the type of questions you need to figure out. You need to get a pen and paper down, detailed exactly what your strategy is, and that's the only way you're going to find long-term success. Okay, it's not going to be through following alerts. It's going to be through having a strategy that works and making sure that you backtest it and prove it works, which I'm going to talk about now. How to make a strategy that works. Okay? This is the process. 3 steps, very easy. Number 1, you test. Number 2, you refine. Number 3, you repeat step 1. Okay? This is what you have to do if you want trading to become your full-time income, okay? Not alerts. You need to stop taking alerts. You need to build a strategy that allows you to be self-sufficient in the market if you want to do this as a long-term job, okay? So, what are some ways we can test and refine? Obviously, you can forward test, right? So you can create one of these strategies, write down your rules for entry, stop, what, all the secret 6. You test it out, you trade it. You can do it with small amount of money. You can do it with paper trading. Then you figure out, okay, is this working? How many trades have I taken? What are the statistics? What is my win rate? What is my risk-reward ratio? Have I been making money over the past month testing this strategy? If not, or if yes, but only a little bit, and you want to improve it, then you need to refine. And the process of refinement can be done in 2 different steps. You can either A, get rid of one of your confluences, or B, you can add to your confluences, right? So if we're going back to the previous strategies, if I go here, we go to this example, right? Let's say I do this strategy, I test it, and it isn't really working out. I can say, okay, let me try tweaking my entry. What if instead of having the entry on the break of the previous day's high or low, I break on the previous 2 days high or low, right? Or we can change it even a step further and say, okay, instead of waiting for the break of the previous day high or low, I'm going to wait for this to happen, and then I'm going to wait for a pullback to another support level. So I can add in a concept that says pullback to another support level to get in. And then I test that, and then maybe, boom, that increases my risk reward, that increases my win rate, and now I have a winning strategy. Again, you could even get rid of something. Maybe this volume confluence here is ruining things. Maybe you can say, okay, I'm just going to get rid of this completely and only do trades that engulf on the daily time frame at a support resistance level. I'm going to get in at the break of the previous day's high or low. Then you test it, you see how does it perform, and then you go from there. You test and refine, okay? This is the way. This is what I did personally for 2 years. This is what I did personally for 2 years until I finally figured out what my strategies were, clearly defined them, and found profitability and long-term success with my trading, okay? So very, very important. This is the way that strategy building works and exactly what you need to do to become a full-time trader. Okay, the last thing I'm going to talk about is 3 pillars of trading, okay? There's the proven strategy, emotional control, and risk management, okay? Now, this entire webinar so far has been about having a proven strategy, that first step, which is key to trading. But guys, I need to tell you, that is just one piece of the puzzle, okay? You also need to have emotional control. You also need to have risk management, okay? Guys, you can have a strategy that has a 70% win rate with a 1 to 2 risk reward ratio, right? Very, very good strategy. Wins almost all the time and has a very good risk reward ratio. But if your risk management is off, you're going to lose money, right? If, out of 10 trades, 3 of them are losers, and on those losers, you size up a ton, and on the winners, you've used very small size, you're not going to see consistent results, and you're still going to end up with a loss. So it's very, very important that you have good risk management as well as emotional control, right? A proven strategy is only good if you're able to follow it, right? You need to have the discipline to follow your strategy. It sounds very easy, right? It's crazy because if I put a winning strategy in front of your face, I said, this is a strategy that has a 70% win rate with a 1 to 1 risk reward ratio. And in the long run, I can guarantee you will be successful with it. I'm willing to bet 90% of you guys still would not be able to follow it because of emotional control, okay? It is so key. You need all 3 of these in order to become profitable. So make sure that you guys have all of this in the bag, and let me know if you guys want me to do webinars on emotional control and risk management. I can totally go ahead and do that. But for now, we are going to hop in a Q&A section. So I know I went by that pretty quickly. I will post a link to this so you guys can rewatch it if you need be, but let me know. Put some questions in the comments in the YouTube chat right now. I'll go ahead and answer it. You can keep it about strategy building. It can be about my trading personally, whatever it is. Let me know if you have any questions. We're going to do this for a few minutes, and then we're going to enter into the surprise at the end. So put some questions in the chat. Let me know, and then we will head over to the surprise after that. So yeah, more, yes, more webinars for sure. Yes, I can definitely go ahead and do some more webinars for you guys on risk management and emotional control for sure. But for now, let me know in the YouTube chat if you have any questions, and if not, we can just go straight to the surprise. I know it was pretty quick. I ran through it a little bit quickly, but we will go ahead and do some questions now. So Hammer Gaming says, what time frames do you personally use? That's a great question. I look at all time frames personally. I'll usually start out on the daily and 4-hour chart and then zoom in on the 5 or 15 minute when I take my trade. So I look at all of them. I'll zoom out first, look at the bigger picture, and eventually scroll in and look at the smaller time frame to get a better entry on price. Great. John O'Connor, techniques for staying in a winning trade. Great question. So the answer to that would honestly just be scaling, right? If you have a problem of getting out of your winners very quickly, what you can do is just take more contracts. So if I take 3 contracts, I can get out 1 contract at my target, and hold winners, right? I can get out, 2 of the contracts in my first target, hold the last contract for a move much higher, and that lets you A, take profit, and B, stay in a winning trade a lot longer. Okay. Quan said, I was hoping to know how to use website to implement such tests given strategy. It's a very good question. I'm actually going to show you that in a second. So stick around for the next few minutes as I answer that question for you. Would you recommend backtesting? Yes, backtesting is a great tool to use as well. It's very good to go back in the charts, see if your strategy would work and where you can improve on it. How do you plan in the morning before trading? Another great question. So the way that I do my planning in the trading is for swing trades, I do all of my plans on the weekend. So I will figure out, where do I want to get in, put my entry, stop, and target. For my day trade, since it changes based on the stocks I'm looking at, what I'll do is I'll write down on TradingView on the note, is I'll write down all of my if this, then that statements. And that's essentially how I do my trading. So I'll look at, where are my setups, where are my strategies, and I'll say, okay, if this happens, if price reaches this zone with this volume, then get in with a stop loss here and a target here. So I write down all of my trading. It makes it very easy of, okay, if this happens, then this happens. If this, I'm going to look to go long. If this happens, I'm going to look to go short. So again, very good question. How often do you think supply-demand works percentage-wise? Again, another good question. So supply-demand on its own may not work, right? There's way too many zones to test to really figure out a real number for that. That's why it's very important to build a strategy around it, right? So if I go back and show you, if supply and demand is your main concept, right here, right? Supply and demand is your main concept. You add confluences around it to give yourself a better win rate. So supply and demand by itself, may not work, but if we add in, a specific amount of volume, then it will increase its win percentage. If we add in a specific candlestick formation to form at a zone, that will increase its win percentage. If we add moving averages, that could also increase its win percentage. So it's a constant idea of figuring out, okay, when do I want to get in, how do I want to get in, and which confluences do I want to use with my strategy. Okay, tell you how to get rid of FOMO. FOMO is tough. That would be more on the emotional controlling side of trading. What I can say though is that having a proven strategy and having a strategy works will actually help you get rid of FOMO, and I'll explain why. I always use this example with the casinos, right? If you're the owner of a casino and you know that blackjack in the long run, you're going to make money off it, right? The casino has an edge. They know they're going to make money, right? Casinos aren't always looking for ways to, they're not getting FOMO of, oh, I need to buy this next game. I need to do the next game. I need to do this and do this. No, casino owners know if they just put out the blackjack tables, they're going to make money. And you have to apply that same concept with trading, right? If you have a strategy that actually works and you've tested it and okay, this actually works, it's going to help you install in your brain like, okay, if I just stick to the strategy, I'm going to make money. And once you figure that out, you're going to get less FOMO. You're not going to care about chasing the hot stocks because you have a winning system. So once you have a winning system, it makes it very easy to figure out your trading and, become successful in that sense. What confluences do you use with supply and demand? Great question. So me personally, I use volume, and I use trend, and I use balance theory, okay? Now, I can do a webinar on those concepts specifically if you want me to in the future, but for now, those are the 3 main confluences I use with my strategy. Okay. Now, we can move on. I'll do one last question, and then I'll go on to the surprise at the end here. So, Jose said, do you use extended hours when charting? If so, when? And if you do, at which point do you switch to regular hours? Great question again. Personally, I do not use extended hours when I trade. I only look at the regular trading hours. When I'm trading SPY, I will look at ES futures ES futures do play a good role in my trading for SPY, but when it comes to regular stocks, I don't look at after hours or pre-market. Personally, there's just no volume there. There's no institutional activity, no big buying, no big selling from the banks. All of that is done during regular trading hours when there is a lot more liquidity in the market, and there's a much better opportunity for those guys to play. So that is the answer to that question. So we can go ahead and now move on to the surprise. So if you guys enjoyed this webinar, you've learned a little bit about creating strategies, Secret 6, right? How to do all of this. I've actually created a software program that does all of this for you. Okay, so it's called FIMU, FIMU.com. And actually, the first 20 people who sign up and use code webinar are going to get 15% off. So I'm actually going to show you guys right now what FIMU is. So this is it right here. It's a software tool I built. Right, this is an example of one of the strategies I have. So it shows the what, the when, entry, stop, target. You can see this is an example I have where entry would be, prices below VWAP, break above VAH and VAL, and then make sure price is still inside the previous day's range. Stop would be above or below the VWAP, and then a 5-minute candle closing. Only going to be trading the first hour of the day. Trading futures, only ES and NQ. I'm going to have 2 targets. First one is the previous day high-low. Get out half my position, and then get out the second half position at the 3R of whatever my stop is. So what you can do, the thing that I love and why I built this, because you can actually click and create your own, and it's literally going to be like an AI and walk you through the entire process, right? So are you ready to make a profitable trading strategy? Yes. And it'll walk you through it, right? So let's say you don't have any strategy at all. You click OK. And then it'll say, okay, do you want to go to a library full of trading strategies, right? There's a whole educational section in there with 10 different videos. And you can say, no, thanks, I'm ready to build. I'll walk you through the entire Secret 6, right? So what role? Let's say you're trading options. Okay, which stocks are you going to trade? Less than $1. Then we can get the when part, day trading or swing trading. How long should they take, right? So you get very specific. It walks you through the entire process of trading. So this is FIMU. The strategy building is just one part of it. It also helps you very clearly define it, lay it out, helps you show your trade journal. Again, I haven't updated this in a while. This is one of my test accounts, but shows your P&L, number of trades you took, emotions, how to fix it. You have your charts here. Also gives you solutions back right here on how to fix your trading, how to improve on it. It will actually figure out when you enter in your trade journal, which, why you had losses and ways you can fix that. So, for example, I'll just go through it. 2 trades. Did you follow your criteria and all of your strategies? Yes. Let's say you had a loss. You say you lost $400. What are some of the reasons that you think you had a losing day? Your target's not being hit. Losses are big. Taking too many trades. It's going to take all of this information, and then what it's going to do, it's going to give you solutions based on it. So it's going to help you ask, what could you do in order to solve it? Test, it'll update it. And then in the future, there's going to be a bar up here. Oh, it looks like it's showing up right here. Okay, not anymore. So it will show up in the future. It will say up here, the biggest reason you had why you were losing money is this. And then you'll click on the solution. It will take you to the solutions here, and it will show you everything within. You can click on these, let's say you're taking profit too soon, give you a quick little blog on how to fix that. So thank you guys so much for joining this webinar. Again, head over to FIMU.com, use code webinar when you sign up. You'll get 15% off, only for the first 20 people. So I also have a free 7-day trial. So you can literally test it out for 7 days. And if you absolutely hate it, you don't love it, you can just cancel and I won't charge you anything. So it's pretty much free for 7 days. It doesn't hurt to try it, guys. Let me know your thoughts on it. I'm very excited to finally launch it and get that up and running. So I hope you guys enjoyed this webinar. Let me know in the YouTube comments and on Twitter if you want me to do another one. I know it went by pretty quick, but I can definitely do some more on emotional control, on risk management. I can definitely do some on my own personal strategy, on supply demand, on specific concepts, whatever it is. Let me know on Twitter. Let me know on the YouTube chat. And yeah, sign up for FEMU. There's also a Discord involved, so you can join the Discord. It's a very, very amazing community in there. A lot of very great traders. I'll be in there as well, helping you out, helping you build your own strategy. So again, it's free for 7 days. Doesn't hurt to test it out. And yeah, let me know on Twitter how it went. Hope you guys enjoyed this. Yeah, thank you, Leanne. Thank you. I appreciate the thanks, guys. Hopefully this brought some value to you. If it did, let me know on Twitter, and I can definitely do a lot more in-depth as well. So hope you guys enjoyed this. Gonna end the live stream here. Supply demand webinars, yeah, I can definitely do that. And